let me bring in Laffer Associates Chairman and former Reagan Economic Advisor Art Laffer on this question. And Art, it's great to see you. Thanks so much for being here.
Good morning, Maria.
So characterize the economy for us, and how important is a strong economy for the president's reelection?
Well, I think it's really, really, really important for the president, and our economy is doing really well. I mean, this latest GDP number of 1.9% is over a 1.1% above Eurozone, where we've been tracking Eurozone for the last 2+ years. We've just way outgrown the rest of the world. We're about $1 trillion higher GDP today than we would have had we grown at the rates of Eurozone. So his policies are working, and they're continuing to increase our advantage over the rest of the world. And if you looked at that employment number, you couldn't love it more than that number was. I mean, it was great. And I think there are more of those types of numbers coming because of the household numbers are so different from the establishment numbers. I think we've got a long way to catch up. So I'm very excited about the economy, and I think it'll inure enormously to his benefit.
Well, I'll tell you, I mean, 128,000 jobs.
And the stock market, of course.
It was a blowout.
How can I forget the stock market?
It was a blowout number in terms of jobs on Friday, because even when you measure in the upset of the GM strike, of the Boeing production line being offline from the 737,
it's amazing.
It was still incredibly strong. Ken, do you agree with that?
Absolutely. And Art, what can go wrong here? We have low rates, great jobs, and of course low tax rates, supply side economics. What does it mean, in terms of your vantage point looking out to 2020?
I don't think much can go wrong in the economy out till 2020, to be honest. But what can go wrong is this impeachment nonsense. I mean, it really disrupts everyone's thoughts. It takes us off track. I mean, what they're trying to do is they're trying to take all business decisions away from business leaders and put them in the hands of Pelosi and Schumer. This is exactly what Elizabeth Warren is running on. They're trying to move away from a voluntary society where people voluntarily and likingly pay their taxes to police enforcement, IRS agents. It's a completely two different world views. And the one I consider very, very dangerous, it's the one put forth by Zuckman and Saez, as you know, the advisors to Elizabeth Warren. And that's where the real crux comes, is that split. And we'll see how it works out.
Art, good morning. Mitch Rochelle. Clearly, the consumer is driving this economy. If you look at the GDP print, it's all about the consumer, not all about business. In order to keep the consumer going, what stimuli do they need? We're not going to get a tax cut. We've gotten 3 rate cuts. Is there anything else that the Fed or Congress can do to continue to keep the consumer stimulated?
Well, what the Fed and what Congress and what the administration have done on deregulation, tax cuts, has a long-lasting effect. There are long lags in this. And, the tax cut is still working overtime on creating higher GDP, higher economic growth. And I expect it to continue to work longer. I mean, the tax cut is not just one sugar high, and then we go back to where it was before. Not true. Our growth rates, quarter in, quarter out, are exceeding the rest of the world's by substantial amounts because of the tax cuts, because of deregulation. And I expect, that'll be working well into 2020. And will really keep us going on a strong economy.
And you've said in the past, if we get a China deal, that's all gravy. You're expecting the markets to take off.
Oh, that's huge. Yeah, if we get a good China deal, I mean, as I said, and I'm just guessing, by the way, whistling in the wind, but I think 4,000 or 5,000 on the Dow is what a good China deal would do for the U.S. And that would really, really imply a phenomenal economy in 2020. And I'm hoping and expecting it'll be true.
All right, we will leave it there. Art, it's great to see you. Thanks so much.
Hey, it's great to see you guys. Thank you very much.